Hello everyone, this is Andrew McNair from SWAN Capital with our March 2015 Educational Economic Update. In this month's video, we're going to be talking about some of the major economic events that occurred last month to give you some insight into what they might mean for you as an investor. Now, as always, please stay tuned at the end of this video for a required disclosure statement. So the Federal Reserve and interest rates dominated economic headlines last month. To support the economy, the Fed has kept interest rates at historically low since 2008, which isn't news to any of you. But since bond buying operations ended last October, the next step will be to start slowly raising interest rates to quote-unquote normal levels. And this is to prevent inflation from getting out of hand. So after the March Open Market Committee, Fed Chair Janet Yellen announced that the Fed is moving away from a patient interest rate policy and will start thinking about raising interest rates as early as this year. Though we don't have a date yet, many analysts think that rate hikes could come in mid-June. Though investors are getting nervous about higher interest rates and what it can mean for the economy, we know that the Fed will move carefully to avoid damaging the footholds that the economy has made so far. Now, speaking of the economy, we also got a look at the final fourth quarter GDP readings, gross domestic product, which showed that the economy cooled in the last 3 months of 2014, growing just 2.2%. This brings overall 2014 economic growth to 2.4%. which is up from 2013's number of 2.2%. Investors really care about this GDP number because it's the most comprehensive economic scorecard, and it shows us at a glance how the economy is doing. Though the relationship isn't simple, healthy economic growth generally translates into strong corporate profits. And all else being equal, strong profits usually boost markets. Now, if we dig deeper into this data, we see that strong consumer spending exports and business investment supported the economy. The growth rate decreases because of higher imports and lower federal government spending. To translate all that into plain English, it means that the economy was fundamentally on very stable footing at the end of the year. Though we don't have the first quarter GDP numbers quite in yet, clearly the Fed feels comfortable enough about the economy to think about taking the training wheels off and raising interest rates. Looking ahead though, as first quarter ends, investors will turn their attention to corporate earnings to find out how the U.S. companies have performed. Right now, overall expectations are low because of weak overseas demand, low oil prices, and a very cold winter. Now, since leadership teams like to underpromise and overdeliver, we do expect and hope for some positive earnings surprises. We'll know a lot more in the next coming weeks, and we'll keep you updated. But that's it for March Educational Economic Update. And as always, if you have any questions or concern about what we've discussed here, please give our office a call at the number below, which is 850-380-9558. Now, we do have a really great client event, Painting with a Twist, coming up in March. You don't want to miss the event. Shred Day was a huge success. We got to meet with a lot of our clients and shred their confidential documents and grill out at the same time. It was really a fun event. But Painting with a Twist is a great time to paint and eat some food and drink some wine. You don't want to miss the event. So give us a call at 850-380-9558 to RSVP. I hope you're having a wonderful month so far, and we look forward to seeing you next month. See you.